thank you very much for attending DFS Marketing's national webinar on Learn How to Sell a Long-Term Care Annuity Correctly. Today it's 1 o'clock. We're going to be starting right now. We're not going to take too long. Our agenda today is to cover about 30 minutes. I know everybody's really busy and you took a lot of time to out of your day to join us for this educational webinar. And I'm Julian Doherty. I'm the president and founder of DFS Marketing. I'm going to get right to it. Again, thank you very much for attending. I know some people are still logging in to the webinar. But before we get started on Learn How to Sell a Long-Term Care Annuity Correctly, if you haven't already registered for DFS Marketing's mega event, you can go to our website, dfs-marketing.com. On March 31st, I will be hosting a mega event. And DFS, we're an insurance marketing organization based in Conroe, Texas. And we've been in business for over 6 years. And I'd like to cordially invite you to attend our workshop on March 31st in Conroe, Texas, where we're going to be presenting our free Index Universal Life and Annuity Lead Program. Never before has a company offered so much value at one meeting when it comes to equipping you to sell IUL and annuities. We are one of the leaders in producing prospects that have shown a direct interest in purchasing life insurance or annuities. Since the inception of DFS, we've been educating prospects, compiling information, and providing agents the tools and marketing they'll need to sell more business. We generate prospective clients that have a direct interest in annuity or an IUL product as a retirement supplemental income vehicle. Our demographics are people between ages of 45 to 70 with household incomes of $120,000 or more. These prospective clients, they're not happy with the returns on their current retirement or income strategies. The prospects fills out the solicitation, checks off the boxes that they're interested in, and we provide you this lead for free. The clients have shown an interest in the following: reducing or eliminate taxes on Social Security and interest income, earn higher interest than on CDs with no risk to principal balance, pass your IRA or 401k to your spouse, children, and grandchildren, protect from stock market losses due to market volatility on your principal and interest. What you'll learn at the meeting is how to receive our free Index Universal Life and Annuity leads, how to position yourself to sell more IUL than you could ever imagine, the ultimate annuity sales pitch and sales tool, ticking time bomb and working with high net worth clients, the strategy for answering and overcoming any objection when selling IUL, how to present annuity in a way that makes prospects want to own it, a complimentary software calculator that'll help you close more IUL prospects, marketing and prospecting programs to attract more annuity opportunities. You'll receive information on our award-winning agent platform, superagenttools.com. If you do attend, you will receive a free financial planning website, and you will receive free mailings for IUL and annuity leads. All you have to do is register at my website, dfs-marketing.com. If you have the opportunity to join us, you don't want to miss this meeting. It's not a meeting with a bunch of fluff. This is a meeting for agents that are really serious about having a quantum leap in their business, working in a very desirable market, the income planning market. You'll really leave the meeting with superior knowledge of annuities and how to position it for sales success. Just complete it. If you're doing business with DFS on the annuity and life insurance side of things, I want to just show you our Paid Bucks program. Our Paid Bucks program can be used just like cash for any business expense. It's one of the highest paying production incentives in the industry for every dollar you produce. Consider using your Paid Bucks for many business building programs. Our CD Buster, our 401k small business referrals, the lead connection, new government changes, website development, search engine optimization, a Roth conversion seminar, one-on-one appointments, Social Security maximization, final expense breakthrough, or any other type of marketing you choose. If you hit 100,000, you'll earn 250 paid bucks. All the way up to 2 million is 5,000 paid bucks. If you say, well, Julian, I don't want to use it on marketing, send me a check, and we'll send you a check. The only carrier who won't allow us to qualify production for the Paid Bucks program, it's Global Atlantic on their ForCare, on their elite products, but all the other carriers we offer will allow you to participate in our Paid Bucks program. Well, if you're a type of producer that loves to travel, I'd like to also introduce another incentive program for doing business with DFS. Our 2017 Producers Individual Travel Awards Program. DFS Marketing, we don't have group trips in some off-the-wall place during some off-the-wall time of year with a group of off-the-wall people. We like to call it when you want, where you want, and with who you want. If you produce with DFS, you could say, well, I want to go to a ski resort. I want to go on a cruise. I want to go to South America. Or I want to go to Canada. Maybe Disney World. Maybe the Caribbean, the Masters, Asia, sporting events like the Super Bowl, London, Las Vegas, Hawaii, South Pacific, Europe, or even the Rose Bowl. Let me show you some of the qualifications. When you do business with DFS, it starts at $500,000 for our travel rewards program. You'll qualify at $750 for travel for $500,000 in business, all the way up to $2 million. And the beauty of it is my concierge service will book your travel when you want, where you want, and who you want. We handle all the travel and all the booking of hotel, events, rent-a-cars, airlines, anything that you would like to do with your family when you want, where you want, and who you want to go with. I feel it's the most lucrative travel program out there where you can travel with your family or with your significant other. Also, let me show you DFS Marketing's financial planning website. If you want to submit business with DFS, we build you your own financial planning website. There's no production requirements like a lot of other marketing organizations to keep this website maintained and up and running for you. All you do is tell us you want your website to be johnsmith.com or financialplanning.com, and we'll buy the URL. We'll build you your customized website. We will maintain it, and all we ask for you to do is submit one piece of business per year. We've got the best website developer working for us, I believe, out there. And anything you want, if you sell PNC or health insurance or life insurance or annuities, if you have videos, if you want many pictures on this website, we'll build it for you. Also, we will update it with the latest news. So if you send customers to your website, it'll always be updated with the latest and greatest news. And that's all for free, just for doing one piece of business with DFS. We'll build you that website. If you already have a website and you think it needs to be updated, we can do that. We can transfer your current web address, and then we'll build you out your new website. I really think this is so important to have a website in today's technically advanced environment. You know, the senior population is the fastest growing internet population out there, you don't look like you're a professional if you don't have a website. You know how many times I've seen sales being canceled because an agent didn't have a website? The Mr. and Mrs. Jones buys a $100,000 annuity with an agent. They tell their son or daughter. The son or daughter tries to look them up on the internet and can't find the person or that agent. They tell mom and dad, cancel that and don't buy that. We can't even find this person on the internet. It's so important to have a web presence. Well, now what we're going to do is we're going to get started on DFS Marketing, learn how to sell a long-term care annuity correctly. Today, it's so difficult to sell long-term care insurance out there. It's so expensive. You know, people feel like they may never use a long-term care policy. They can't fathom the fact that they could need to pay $1,000 a month for a long-term care policy that they may never use, and all of those premiums for all of those years they feel like would just go to waste if they didn't use it. I've heard stories, well, I don't need long-term care insurance. My dad lived to 101 years old and he died in his sleep. I don't want to pay these long-term care premiums, and I may never use the services of long-term care. Wow, that is such complete wrong information. Wait till you see the statistics of who needs long-term care. You know how many agents I see out there selling index annuities with an income rider and a doubler for medical expense planning? I see agents selling that as a true long-term care comprehensive rider for clients. I see too many times agents saying, yes, this index annuity with an income rider has a long-term care rider attached to it. So the customers feel like if they give the $20,000 to this agent and put it in this annuity, that they're going to be purchasing an annuity and a comprehensive long-term care policy, which is completely incorrect. All these long-term care doublers on these income riders do is double income payments for a certain period of time. So $20,000 or $100,000 investment into an annuity with a doubler of income, if a customer can't do 2 of the 6 activities of daily living, is completely not a comprehensive long-term care policy. In fact, the agents that I work with that sell an annuity with a long-term care, with an income rider, with a doubler, I ask them to sign, and have the client sign an additional disclosure saying, this is not a long-term care policy, this is a doubler for income. So the producer doesn't have to sit in front of a judge or in front of an attorney and explain, why did you sell this annuity as a long-term care policy, when in fact it's not. It's just a doubler for income. Well, today I hopefully can change the way you are selling annuities and learn how to sell a long-term care benefit annuity correctly. I'm going to start right now, so if you could focus on your screen. Our training objectives today, we're going to cover the likelihood of long-term care, the need for a long-term care plan, and the benefits of care. The likelihood of long-term care. Statistics have shown that our clients will be living longer in retirement. As our clients live longer, there's a greater probability that they will need some form of long-term care. Over the age of 65, what percentage of people will need some form of long-term care? 30%, 50%, 70%, 90%? The sobering reality, fact, 70% of people over age 65 will need long-term care. You just witnessed an exercise that, according to the statistics, each one of us could experience over the course of our lives. The question is, will your clients be part of the 30% of people over age 65 who may not need long-term care, or will your clients be one of the 70% of people over age 65 who will have to face the sobering reality that you'll need long-term care. We would all like to think that we're part of that 30%, but more and more people are being affected with conditions requiring long-term care. Are your clients prepared to fund it? Do your clients know someone who is afflicted with a condition requiring long-term care? How are they funding it? How would your clients fund it? Let's go through some of these staggering costs associated with long-term care. In a private room in a nursing home, it costs about $229 a day, or $6,870 per month, or over $82,000 a year. Or a semi-private room in a nursing home, $205 per day, or per month $6,150, or a little over $73,000 a year. Or a one-bedroom unit in an assisted living facility, about $106 a day, $3,180 per month, and a little over $38,000 a year. Home health aide, about 4 hours a day, $84 a day, about $2,500 per month, and a little over $30,000 per year. Homemaker services, about 4 hours a day again, $76 per day it would cost, about $2,200 per month, or a little over $27,000 per year. Adult daycare center, 5 days a week. It's about $67 per day, or about $2,000 per month, or a little over $24,000 a year. Take a look at that again. At this rate, 5 years at an assisted living facility would cost over $190,000. Man, the cost of long-term care is really expensive. Now let's talk about where is the money your clients plan to use to cover all this cost. Most people, they've set aside emergency funds, commonly for health-related incidents, are not willing to take risk with these funds. Does this sound like the plan your clients have created for their health emergency funds? $100,000 in a CD at, let's say, 0.5% a year, that's a 5-year gain of $2,500. In a money market account, if you're lucky, at 90 basis points or 0.9%, that's over $4,500 over 5 years. A savings account at 0.25%, that's a little over $1,256 in interest over 5 years. Or a fixed annuity at 3%, if you're lucky, for a 5-year policy, that's $15,900 over 5-year gains. Where's the money your clients plan to use? Usually these assets end up being invested in CDs, savings, and money market accounts or fixed annuities. However, in a really low interest rate environment, currently like the one we're in, returns on these type of products can be lower than expected. Other options such as stocks, bonds, mutual funds, variable annuities, or real estate could potentially provide growth but typically require exposure to greater market risks that clients aren't willing to take. Again, 76% of fixed annuity owners plan to use their annuity savings for healthcare emergencies. Again, a CD, that's on $100,000, 5 years, that's only $2,500 in gains. Money market account at 0.9%, that's $4,500 in gains over 5 years. And again, a fixed annuity, if you're lucky, if you can find a 5-year fixed annuity at 3%, you're getting about $15,927 in gains. You know, if you put money in the stocks or in the stock market, yeah, you probably could have some potential for upside, but that money can also decline really quickly if the market does crash. And if you're using those funds in the market to pay for healthcare expenses, it could disappear relatively quickly if you're not managing it correctly. Is there another way? Yeah, there's another way. Fixed annuity benefits. It gives you interest crediting options, income options, tax deferral, and any remaining contract value passes as death benefit proceeds. Fixed annuities have been an attractive option for many investors looking for guaranteed interest rates, a choice of payment options, tax deferral, and the opportunity to pass any remaining money to beneficiaries through death benefit without complications of probate. Is there another way? But as we saw, rates are low, so you may need a hybrid solution. Even if rates rebound, how long would it take you to build the value of your annuity 2 or 3 times? Again, the fixed annuity benefits, interest crediting, income options, tax deferral, and the remaining contract value passes as death benefit proceeds. Then, the hybrid side of things is the long-term care benefits. Potential to multiply the contract value. This is where it gets really interesting. Is there another way? The 4-care fixed annuity from Global Atlantic. A fixed annuity for the 21st century. It's going to give you fixed annuity benefits. It's going to give you interest crediting, income options, tax deferral, and the remaining contract value passes at death benefits proceeds. It's a simple process, half-hour screening, phone interview. There's no blood work, there's no labs, there's no meeting a nurse during the day. It's just a phone interview. And you'll also receive the long-term care benefits, potential to multiply the contract's value. Is there another way? The 4-care fixed annuity, a fixed annuity for the 21st century. We're really pleased to introduce this to you, the 4-care fixed annuity. We call 4-care a fixed annuity for the 21st century because we have added enhancement options specifically designed to help your clients pay for these long-term care expenses that we just went over, which could potentially have a catastrophic impact on their retirement funds. As people are living longer in the 21st century and the probability for long-term care increases, our 4-care fixed annuity provides long-term care coverage equal to 2 or 3 times the contract value. We've created a simple process to help you determine if the 4-care could be a key component of your client's retirement protection programs. If 4-care is right for them, they can find out if they're approved quickly through a simple half-hour process like I told you just a minute ago. Let's talk about some of the 4-care facts. Up to 3 times for long-term care expenses. 4-care will provide coverage of 2 times or 3 times the contract value for long-term care expenses. This multiple, known as the 4-care multiplier, is determined through a simple underwriting. Expenses are first reimbursed from the contract value without withdrawal expenses or charges. Once the contract value is exhausted, the multiplier kicks in, providing additional resource for expenses, all tax-free. So what that means is, if you put in $100,000 and you have $300,000 available for long-term care benefits, you're going to go through your first $100,000, and then the Global Atlantic is going to kick in with their money. Up to 3 times the contract value for long-term qualifying expenses. More value accessible to help defray the effect of these long-term care costs on family and finances. Use tax-deferred dollars to provide tax-free benefits. So you put in $100,000, that's your contract value day one. If you qualify, you could get $200,000, or if you're in a little bit better health and you get approved at the elite level, you would receive $300,000 for long-term care expenses immediately. Let's give you some of the 4Care tax benefits. Tax deferred growth, so you're not paying any taxes on your interest, it's tax deferred. Long-term care rider charges are not taxed as distributions. Benefits received for qualified long-term care expenses are tax-free. Existing non-qualified fixed and variable annuities, as well as the cash value from permanent life insurance policies, may be exchanged tax-free for a 4Care fixed annuity by utilizing the 1035 exchange. So this is for non-qualified money, not qualified money. Let's talk about some of the amounts available to pay for long-term care. Let's take a look at this example. Let's say your clients have a total income tax rate of 28%. They have, let's say, $100,000 to invest. Let's take a look at how much two of the most common types of accounts would stack up over 15 years. So $100,000 today in a CD at 0.5%, $100,000 in a fixed annuity today at a rate of return of 3%. So let's say the clients are total income tax bracket at 28%. They've got $100,000 to invest. You can see if they're in a CD on the left-hand side of your screen, the CD over 15 years, your $100,000 would be worth $105,000. If you put $100,000 in a fixed annuity, a fixed rate annuity at 3%, in 15 years you'd have $140,000. Now let's see how the 4Care fixed annuity stacks up. Let's say the client's rating comes back at standard, meaning he or she is approved for 2 times the contract value. You can still see that after 15 years in a CD, the $100,000 would be worth $105,000. In a fixed rate annuity at 3%, the $100,000 would be worth $140,000 after 15 years. Now take a look at the 4Care multiplier on $100,000 and see what the long-term care benefits would be available today. On $100,000, at the 4Care standard rate, it'd be $200,000 available today. Even after 15 years, $200,000 would be available today. That's a lot more benefits instantly than any other type of investment vehicle that most people save in to pay for health coverage. If they're approved, the customer's approved, and their coverage, let's say they're at the Premier level, which is like preferred is what we call it, but Premier is worth 3 times or $300,000. That starts today. They don't have to wait 15 years. Which one of these options would your clients choose? $100,000 in the CD, 15 years, it's worth $105,000. $100,000 in a fixed annuity after 15 years at 3% rate, it's worth $140,000. If you're standard, the 4Care is going to give you $200,000 for long-term care benefits. If you're approved at Premier, you're going to receive 3 times your benefits today, instantly, and 15 years later. Very competitive. So how does this long-term care benefit work? Standard, they're going to get a 36-month accelerated benefit for single life or 36-month extended benefit. Premier, single life, they're going to get a 24-month accelerated benefit and a 48-month extended benefit. I have a producer who called me earlier and said, Julian, will this cover a husband and wife? Yes, you could do this joint life. Standard, a 42-month accelerated benefit, a 42-month extended benefit for 2 people. Premier, 30-month accelerated benefit or 60-month extended benefit for 2 people, joint life. Now let's talk about some of the items that are covered under the 4Care policy. Home health care services, Homemaker services, home health aid and personal care, Chore services, assisted living facility, bed reservation, nursing home facility, hospice care, nurse and therapist, adult daycare, respite care. To qualify for the long-term care benefits, the insured must be diagnosed as chronically ill, which means he or she is unable to perform at least 2 of the 6 activities of daily living or requires substantial supervision due to severe cognitive impairment. So let's talk about the 4Care facts real quick. Remember at the beginning of this presentation covering the 4Care policy, I said that it's really difficult to sell long-term care today because people feel like they may never use the money for the policy for long-term care benefits, and they may feel like they wasted all those premiums for all those years for no use. So it's hard to convince somebody to spend $1,000 a month to pay for long-term care benefits when they feel that they're not going to use it. Well, if you buy this 4Care annuity, and let's say you put in $100,000 and 10 years later or 20 years later you don't need it, well, you still have your $100,000 as a fixed annuity. It hasn't disappeared. It's still another part of their client's portfolio. The 4Care is a single premium tax-deferred annuity with qualified long-term care benefits. The issue ages 50 to 80 if it's the insured, or the owner and annuitant is 0 to age 85. The minimum annuity deposit is $35,000. The maximum is $400,000 if you're single, or $600,000 on joint. You've got a guaranteed fixed interest rate declared annually on the contract anniversary date. There's no waiting period. There is a 90-day elimination period within 270 consecutive days, waived for home health care with qualifying plan of care. The rider charge rate is guaranteed to remain unchanged through the life of the contract. That's so opposite of what a long-term care policy can do for a customer. I have agents calling me all the time saying, Julian, my clients' long-term care premiums have just now doubled and now tripled. They continue to increase my clients' rates. Well, the rider charge rate on the 4Care policy is guaranteed for the life of the contract. It won't go up. The contract value at month end will never be less than the contract value at the prior month end, less any withdrawals. So it's a 9-year fixed annuity. The surrender charges are 8, 8, 7, 6, 5, 4, 3, 2, 1, 0. 10% free withdrawal during withdrawal charge period. And the withdrawals are not related to long-term care. The withdrawals that are not related to the long-term care will reduce the benefit proportionally. So if you make a 10% withdrawal, it's going to reduce your long-term care benefit proportionally. You know, a lot of producers ask me, well, what is the suitability like if I were to transfer another index annuity from another carrier to the 4Care annuity? Well, Forethought says, well, this policy offers so much more in benefits, up to 2 or 3 times for long-term care benefits instantly, that we are really, really easy to work with on transfers from other carriers. Forethought states that we will not accept any transfers where a client will incur a 10% penalty or greater, and they say they're not going to take any annuities transferred over from another policy that is less than 2 years old, unless it has a return of premium feature. Then they'll consider it. And obviously the client has to have liquid assets and a certain amount of income, but they're really, really open to accepting business. And if I say Forethought and I say Global Atlantic, well, just to let you know, Global Atlantic purchased Forethought. You've all heard of Forethought. and now Global Atlantic owns Forethought. So let's go back. There's a market value adjustment on the policy, and you've got a really easy application process. The agent does the visual view, checks the height and weight parameters, 10 questions for the client on the app, 15-minute call interview, decision, find out if your client is approved really fast, and the 4-care multiplier is approved at standard or premier. The simplified underwriting takes about 20 or 30 minutes, completed at the point of sale. Whatever you do, when the person calls your client at the underwriting company and says, do not write down the questions that I'm asking you because they're doing a cognitive test, please make sure your client doesn't write down the questions that they're asking. I had a client do just that a couple of months ago where the lady on the phone said, do not write anything down when I ask you these questions. The lady on the phone asked the questions to the customer, and then at the end said, did you write down what I was asking you? And the client couldn't lie. She said, yes, I did. Well, that was an automatic denial and cannot be reapplied for a year. So don't have your clients write the questions down. So you can add an inflation protection rider. It's an optional benefit. It's a one-time fee issue deducted from the initial deposit. It's only available at issue. It cannot be terminated once elected. And what it does, the maximum monthly benefit and remaining unused extended benefit amount will increase at each anniversary by 5%. A lot of people are worried about inflation. It's a good inflation protection rider to add. The accelerated benefit period will be shortened because the maximum monthly benefits are going to be increased. The length of the extended benefit period, it'll be the same without the rider. You have a non-forfeiture rider. It's an optional benefit. It's a single fee at the issue deducted from the initial deposit. It's only available at issue. It can't be terminated once you elect it. And if, after the policy has been enforced for at least 3 years, the client surrenders the contract, they will return all rider charges without interest via long-term care benefit payments, subject to a 90-day elimination period. Let's talk about the training review one more time. Likelihood of long-term care we went over, the need for a long-term care plan, the benefits of 4-care. Remember, fact, 70% of people over 65 will need long-term care. Long-term care expenses can be expensive and quickly drain a client's assets. The 4-care will double or triple that contract value for qualified long-term care expenses. No income tax on the withdrawals for long-term care expenses. And the remaining contract value at death passes on to beneficiaries. You get an instant, simplified underwriting decision. Gosh, this 4-care annuity is super strong. So what I'd like to also do, if you'd like to get appointed or if you'd like to get a quote from DFS Marketing, that would be great. I'm going to go ahead and answer some questions. What are the commissions on the 4-care annuity? For the younger ages, it's 6% commissions. I've got one that says, what is the percentage of people being approved or being declined for underwriting? Well, I have seen it where I think they said 98% of all people that apply for the 4-care policy is approved. I can't promise that. I don't know if that's true or not, but that's what I've heard from some of the representatives at Global Atlantic. Here's another question. Is this also designed for accumulation? No, the 4-care annuity is far from an accumulation product. It's pretty much a return of premium product. You put $100,000 in 10 years, your account value is probably going to be $100,000 still because of the rider costs that you're paying for the long-term care benefits. So here's another question. Is it have an income rider? No, this is just a long-term care policy, folks. It's just for it's an annuity with long-term care benefits. I should correct myself. It's not a long-term care policy, but it's an annuity with long-term care benefits. And I'm going to launch a poll on your computer screen. And if you have a client in mind that you'd like to have somebody here at DFS help you with, if you have anybody that you want to get a long-term care, a 4-care quote, just go ahead and answer yes or no on your computer screen, and we'll have somebody reach out and touch base with you. I want to thank everybody for attending our national webinar. It is Friday. I've gone a little bit over my promised time of 30 minutes, but I had to get it all out, folks, and share with you how this policy works. I do appreciate everybody taking the time. This is the conclusion of our webinar. If you could, I can see some of you have voted yes or no on your computer screen. If you do want a simple quote, or if you have a client in mind who would benefit from the 4-care annuity, please go ahead and say yes or no on your computer screen. It's a poll, so we do appreciate it. Thank you for all your business. Thank you for making 2017 already another record year here at DFS Marketing. If you want to get appointed with Global Atlantic to sell the 4-care annuity, go to my website and download the contracting paperwork at the contracting tab, dfs-marketing.com. We'd be glad to assist you and fill out the paperwork if you feel like, and fax it in. Again, we do appreciate, I can tell some of you have not voted. Please check yes or no on your computer screen if you have a client in mind. We do appreciate your time. Have a great weekend. Thank you.